welcome. Yesterday, Bourse managed to push the European currency below parity. As a result, the euro dipped to the level of 0.9958, where a strong buy signal was created. Now the price has a chance of rising to 1.0057 and then 1.0116. This scenario is possible only amid the positive fundamental factors. Yesterday's macroeconomic calendar included data on US consumer prices. Inflation in the country declined slightly compared to the previous month but exceeded analyst estimates. However, the report had a little effect on market sentiment. It's obvious that US consumer prices are still surging. Thus, this is a need to take more active steps to fight them. Against this background, market participants are anticipating a 100 basis point interest rate hike. Given that inflation is above 9% and the Fed intends to sacrifice economic growth in order to bring inflation down, such a steep rate increase will come as no surprise. Today, traders may take notice of trade balance in the euro area. However, these news will hardly have a severe impact on dynamics in the market. The focus of market players will be on US retail sales. A rise in retail sales will indicate that consumers continue to spend money despite higher prices. This in turn may provide further impetus for both economic growth and inflation. In addition, the US will report data on industrial production, business inventories, retail inventories excluding autos, as well as the University of Michigan's Consumer Sentiment Index. From a technical point of view, the 1-hour trading chart shows that it's worth focusing on the range limited by the parity price level and 1.0057. A false breakout at the lower boundary of the range will create a buy signal. If the price breaks above 1.0057 and tested from the top down, the volume of long positions will increase. In this case, the euro will most likely advance to 1.0116 and probably to 1.0182. At the level of 1.0182, it will be possible to go short on a rebound. Short positions at 1.0057 or 1.0116 can be considered only amid a false breakout. In this situation, the euro-dollar pair will remain range-bound. In case of subdued trading activity at the parity price level, traders may go long amid a false breakout at 0.9958 or on the rebound at the next support level of 0.9915, counting on the intraday correction of 30-35 pips to the 0.9958 mark. As for the British pound, the situation is a bit different. I recommend focusing on 1.1849. As the price consolidates above this level, the pound sterling will have every chance of rebounding to 1.1917 and then 1.1980. At the mark of 1.1980, it will be a wise decision to sell the pair on the rebound with a view to catching an intraday correction of 30-35 pips. Short positions at 1.1917 and 1.1849 can be considered only in the event of a false breakout. In this case, the downtrend will continue and the pound-dollar pair will slide to 1.1785. A false breakout at this level will create a strong buy signal, enabling the British pound to return to 1.1849. If the price hits a new year low, it will be possible to open long positions on the rebound at the mark of 1.1707, hoping for an intraday correction of 30-35 pips. Good luck and have a nice weekend.